This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May 25th, 2012. Our time is 8:39 Mountain, 10:39 Eastern. Radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. For those that listen in Calgary, our radio show will be on Sunday, next Sunday, from 4 until 5 o'clock, June the 3rd, Sunday, June the 3rd, 4 until 5 o'clock. Keep that in mind. If you ever miss a radio show, they are archived on Harold's website, HESradio.com, rarecoloreddiamonds.com. You can sign up for our podcast. All you need to do is get on iTunes, subscribe to the podcast, and you can hear our show anytime you want. It was another crazy week. More concerns about Greece leaving the Eurozone. Amazing volatility. Stock markets up and down. JP Morgan, a lot of talk about JP Morgan and further losses. We had the Facebook fiasco last Friday where it was manipulated to stay at $38 by the underwriters, and then come Monday, when it could trade freely, not manipulated, we saw it plunge down. So it was a crazy, crazy week as well. A Spanish bank, as we talked this morning, a Spanish bank needs a $19 billion rescue. It is a crazy, crazy time. It's a holiday in the United States. We had our holiday here in Canada past Monday. They're having a holiday in the United States this coming Monday. But Harold, it's a crazy, crazy time, and we still advocate very strongly having hard assets.
Oh, you better believe it. Probably never more important than now. And I think you really summed it up. This is really confusing, very concerning. There's so many areas of potential problems that what does the small investor do? How in the world do we protect ourselves? Again, we're not the Warren Buffetts of the world type of thing. We're not billionaires. We're everyday hardworking people that, just want to protect what we have. And when you see what's happening in the stock markets and the paper asset markets around the world, what's happening in Europe with the sovereign debt situations where, Greece is going to be thrown out of the euro and back on their old currency, the drachmas. I mean, it's a frightening thing. I feel so bad for the Greek people, because the fiasco that's going to happen with them and how much money they're going to lose just converting from the euro back to their old currency is going to be one of the most inflationary things, and it's going to reduce their net worth by probably 50 to 75%. So it's a very frightening thing. Right now the markets don't know what to do. The markets are trading in a range, and we came off the lows of the market last week where silver hit $26.62 for the second time. It bounced off there, came back up to $29. This week the market was a little bit volatile again because all this news is coming out. But all in all, I'm not disappointed with the way that the metals and the markets really traded this week. Gold right now is trading up on the day. It's trading at $15.71. Silver market's at $28.60. Oil market's trading at $91. The problem is the U.S. dollar is gaining strength. It's at $82.30, which is something that we have to watch closely. The funny thing is that the U.S. dollar is moving up because the euro is dropping. But the U.S. dollar is in just as much trouble as the euro, so, go figure that one out. But we'll deal with that, and that will be dealt with, in its proper time when people see what really happens with Greece and the other countries that are involved. The euro's trading at 125, which is an important number. If it broke 125, the next level is all the way down to 120. But again, the fact is that as all this news comes out in Europe, none of the news is good. The Dow is trading at 12,500. It's been down 14 out of 16 sessions. The TSX is trading at 11,500. Bottom line is that with everything going on in the world, it is the most dangerous time that we've ever been in. We got a brief hint back in 2008 what happens when derivatives start to come into the market, what happened with Lehman when they folded, one of the biggest, financial firms in the world that caused the 2008 debacle. But it wasn't only that Lehman did this. It's all coming to the forefront now. Look what's happening with JP Morgan. Basically, they're so heavy into derivatives that they could fold, they had a $3 billion trading loss, and they don't even know how to unwind these positions. And it's not only J.P. Morgan that's in that situation. Basically, every bank and every brokerage firm trades in the derivatives market, and they don't know how to unwind these positions. They don't know how to get out of them. And the best example is what happened with J.P. Morgan last week. They tried to get out of certain positions, lost $3 billion. Now they're petrified to do anything further. The thing is that this derivative business is a multi-trillion-dollar business. It's so huge, so heavily leveraged, 28, 30 to 1 type of thing, that again, when these positions start to go bad, and they're certainly starting to show that, the losses are gigantic. They can bring down a company in a couple days. We saw it happen with Lehman, and that, would cause the major problems in 2008, and now we're starting to see J.P. Morgan running into a similar situation. We really need to protect ourselves. We need insurance, and insurance in these type of markets are hard assets. We've been talking about this for a long time. Gold and silver have done extremely well. We've been through many ups and downs in the last decade that we've been in the gold and silver markets. Again, gold and silver will actually perform extremely well as the U.S. dollar weakens and more of these situations continue, because the situations in Europe with the sovereign debt situation when Greece has to go back to their old currency, and it's not only Greece, it's Italy, Spain, Portugal, Ireland, all these countries are on the verge of bankruptcy. The fact is that right now, the way that the analysts are projecting what's happening in Europe, they're saying that it is the opposite of inflation. It's deflation, because all these financial situations are so hurtful to the economy and to the pocketbooks of most people that live in Europe. The fact is that they're not using as much oil, they're not spending as much money, they're not buying as much food and commodities and that type of thing, and basically that's why the market is on the lower end of its range. However, what we have to look at is what's going forward. We understand, that when a country goes into a recession, what happens with it? We saw what happened in the United States. We've seen it in Canada. We've seen it all over the world. The bottom line is that deflation means that people are spending less money, and that's why oil prices and food prices and certain commodities have come down. However, the result of all of this is going to be the opposite of deflation, which is inflation. It's going to be massive inflation. And the fact is that massive inflation, which is definitely coming to this market, is why hard assets are so important. If you go back in history, gold, silver, diamonds, art, those type of investments have always done extremely well in times of financial uncertainty, and I just don't think that things could be any more uncertain than they are right now. The risks are extremely high. The potential for loss in paper assets is real. It's happening every day. We read about it in the newspapers where, again, J.P. Morgan lost $3 billion. Just look at Wall Street. There is absolutely no credibility. Look what happened with Facebook this week. They're lying about their earnings. I mean, the stock market is so riddled with corruption, I don't see why anybody would invest in that. It's ridiculous that, these massive firms that are bringing these companies public, especially one the size of Facebook, how in the world do they think that it's going to slip the minds of some brilliant, mathematicians type of thing? They know what's going on. They know that Facebook's earnings are nowhere near what they were projected to be, and now the outlook for Facebook is, number one, that it could drop down to $22. They're going to be sued like you've never seen before for lying, and again, I just don't see how the public can stand for this anymore. Is the Ponzi schemes with Bernie Madoff and all these other guys who ripped everybody off. The SEC does absolutely nothing about this, and who ends up getting hurt every single time is the small investor. He's the one that loses his money and gets taken to the mat type of thing. I just don't know how much longer this is possibly going to go on before people just get so fed up losing money that they just abandon this 100%. You got Facebook in the news every single day. It's just an unbelievable situation that they would lie to everybody just in order to bring a company like that public. Then you got J.P. Morgan. You got $100 billion in risky bonds, $3 billion in trade losses, unwinding a derivatives trade. Very few understand the derivatives, and it's a multi-trillion-dollar potential fiasco that could make 2008 look like it was absolutely nothing. This is why I'm saying that we need insurance. We're just small investors. We're everyday, hard-working people, that have some type of success and just want to protect what we have. And how do we go about doing that? Believe me, you do not do that by taking unnecessary risks. You don't get there by trading certain markets and trying to pick tops and bottoms, because in these type of markets, that's nearly impossible to do. What you have to understand are the trends in the market and what the potential is for certain ramifications, going forward. And all the work that I've done in these markets in the 35 years that I have traded, the hard asset markets and the gold markets and commodity markets, I've got a good feeling as to what these markets are going to do and what we need to do. We need to remain extremely conservative. The fact is that, my young son, Jonathan, who most of the listeners know because they deal with him, immediately wanted to buy Facebook. Kids are into Facebook type of thing, and the projections for it, were strong. And he came to me and he said, Dad, should I put some money? And I said, absolutely 100% not. The risks in the market right now, in the paper asset market, stock markets primarily, are the highest that they've ever been. And if you experienced 1999, where the NASDAQ went from 5,000 down to 1,000, when all the major dot-com companies, had major financial troubles and everybody lost their money back in 1999. Then again in 2008, when the Dow dropped from 14,000 all the way down to 6,500, they wiped everybody out. It took from 2008 all the way up to 2012 for some people to make back, some of the money or a share of the money that they lost in a few months in 2008. So we had to wait 4 to 5 years for it to come back to somewhere of a decent portfolio anymore, and now we're in gigantic risk again. I have not traded stocks or bought any stocks, period, since I sold out in 1999. So basically, every market has its time. I'm not saying that, that there's not a need for the stock market at this point. There certainly is. But the bottom line is that the small investor should never be there. It's all made up of hedge funds and mutual funds. And again, they're all computer traded. You've got no shot making money in the stock market trading on your own. And then you've got these situations that pop up every 4 or 5 years where the market absolutely plummets, like it did in 1999 and 2008. We're very close to that situation happening again. My strongest recommendations right now, with this tremendous risk in the market, again, for the smaller investors, is to, put a lot of this on the sidelines. If you've got a lot of money sitting in the stock market, it's at huge financial risk. You just saw last week, we just saw what happened with J.P. Morgan, and this week we saw what happened with Facebook. So why in the world would we want to risk our hard-earned money and put it to risk in the stock market? I'd much rather see you sitting on the sidelines in cash and not making any return on your money than risking all of your money in the stock market at this time. So again, insurance is extremely important. We buy insurance on our car, on our home, on our life, on our health, and everything. We need to own insurance on our financial situation. And the best way to do that is to own some assets that will respond to inflation and all of these horrendous situations that could come forward. So again, if it's possible, every time you get into your car, you know that it's possible that you can have a car accident. You know that it's possible that your home can start on fire, or you can get sick one day. So why is it inconceivable that we could lose our money in the stock markets or things like that? We've seen it happen before, and it's going to happen again. The stock market's been down 14 out of 16 sessions in a row. So what we need to do at this point here is diversify, make certain that we've got all of our bases covered, and make certain that we own the type of assets that are going to protect us against inflation and a plummeting stock market. And again, we saw in 2008 when the Dow dropped from 14,000 down to 6,500. Initially, gold and silver did drop with it because everything was falling. People had margin calls like you've never seen before. But then, once it settled, gold and silver came flying back and made brand new highs. The reason the stock markets came back was primarily because the U.S. government and the Federal Reserve put trillions and trillions and trillions of dollars back into the market. It had to come back. They took away all the debt of General Motors and Chrysler and AIG and they bought all the toxic assets and all the risky trades of all the banks. So all they did was bailed out all the bad debt, which they're still holding. I just don't think there's enough money in the world to continue to do this again. And just imagine that the people that emotionally, saw their assets drop in half, saw their stock portfolio drop in half in 2008, and finally seeing coming back close to break even, and now it's going to fall again. And then we could see another 5, 6, 7 years until you make your money back that way. You're much better off on the sidelines. You're much better off not taking the risk. And what I've done with my money is, number one, I have nothing risky in the markets at all. I own physical gold and silver that I've owned for 10 years now. I don't trade it. I don't go in and out of the market. And I know the markets very well. I've traded these markets, again, going on 35 years. And I don't trade these markets. I basically buy and hold. I own many diamonds. Diamonds, in my opinion, are the safest investment and will do tremendously well going forward over the next 5 to 10 years. And they can be traded in other currencies. I don't own any stocks. I don't own any bonds. I keep a lot of money in cash. Now, again, with interest rates down to zero, especially in the United States, I'm a Canadian living in the U.S., there is no money to make on cash. All you're basically doing is putting it away and warehousing it because there is no interest to be made on it. However, you're not going to lose it either, because if you put it into the stock market, the chances are you're going to lose it. If you're going to be in the bond market, you're probably going to lose it. Look at this. J.P. Morgan's got $100 billion in risky bonds, and bonds are supposed to be safe. Keep some cash on hand. You can pay down some debt. You've got countries in Europe going bankrupt. That's going to affect the banks all over the world, and it's going to be a horrific situation going forward. So again, the smartest thing that we can do is to not speculate, not be in the heavily leveraged markets trading, trying to make a quick buck, because again, a lot of people jumped into Facebook thinking they're going to make a quick $10, $15, $20 on that stock, and they put a fortune into it, and now they're all down on their money, and now they're all talking about suing. So my feeling is that you need to buy insurance against the worst possible scenarios, because if we lose our money this time, we're not going to be able to make it back. There's no money to be made in real estate, and there's no money to be made in trading stocks anymore. So owning physical gold and silver to hold on to as long as we need to is one of the smart things to do. Again, the markets are trading in their lower range, but gold is still at $1,500, $1,600. Silver's still at $30 or $29. The fact is that 10 years ago, silver was at $4 and gold was at $250. We've seen massive moves in that market, and that's for a reason, because gold and silver will respond to negative situations, the opposite of the stock market. Now, on the other hand of it, if the U.S. government does come out with quantitative easing 3, which means they're going to take a few $1 trillion and put it back into the economy to reignite the economy again, hopefully see things going. Again, where's that money going to come from? You owe $15 trillion. You've got no budget. You've got no money coming in. You're on the verge of bankruptcy. Where is this money going to come from? There's only one place it comes from. They print it. And by printing it, it reduces the value of your dollar. And by reducing the value of your dollar, it means your dollar buys less and less. And when the price of oil is high and the price of food is high, but your dollar doesn't buy as much, that's inflation. And inflation is not only here right now, but it's going to be massive. And if it's going to be massive and we don't protect ourselves right now, we're just going to be chasing the market. We got a real break. The price of silver came down from $50 down to $28. Buy it now. It's a phenomenal buy. Could it go a couple dollars lower? Of course it can. But the fact is that it could explode the next day too, because you've got situations in the market that we also need to discuss, not only the sovereign debt situation, not only what's happening in the United States and in Europe and in China and everywhere else around the world, but on top of that, you've got a potential war in the Middle East that it could cause oil prices to go to $200 or $300. So the fact is that you've got all these situations hitting at one time, and the fact is that most of these countries that are in these situations don't have the money to get out of trouble. And that's when you start making decisions that are the wrong decisions. You know that when money is tight, sometimes you make decisions based on not on logic, on emotion, and that's the worst thing that we could do. What I'm doing with my money, I own physical gold and silver. I've invested a lot of money in very safe diamonds. I've got cash on hand, and I have all my real estate paid for. I have absolutely zero at risk, nothing at risk whatsoever, because anything that you have risky right now more than likely is going to turn against you and hurt you down the road. If we understand what's going on with all these financial issues all around the world, the answer to it is just go back in history. Go back in history to times that are similar to this and see what markets have reformed, and I'm sure you're going to come out with the same outlook that I have: gold, silver, diamonds. Reduce your stock portfolio and have some cash on hand. That's going to get us through the next 5 to 10 years, and not only will we protect what we have, we're going to be able to make some money in the market, and we're going to be able to buy undervalued assets down the road. That's the way I see it. Again, I study these markets on a daily basis. It's my business. This is the 502nd show that we've done in a row. We have never, ever missed a radio show. That's because we take our business very seriously. And again, with all the listeners that we have in Canada, the U.S., and all around the world, we would never, ever let you down. We bring you the information you need to make an intelligent business decision, and then it's up to you to make the right decision for you and your family. Again, we're not risk takers here. We're extremely conservative, and we just don't take those risks, especially now. Gold, silver, diamonds will get us through these difficult times and give us a wherewithal to take advantage of undervalued stocks when it's right to get back into that market.
Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, wants to earn your business. Speak with them. Give them an opportunity to educate you about investing in hard assets. Their telephone number, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. They've been in business 10 years. They have some 10th anniversary incentives. Go to their website, speak with them about the incentives, 1-866-623-2002, the website, wwpmc.com. In our newsletter, we have a free weekly newsletter. We'll be happy to send it out to you via email free of charge every week. Get your name on the list. A must-see presentation from Frank Holmes. He has the ultimate bullish presentation for gold. It's 70 charts. I went through it a couple of times. These charts are amazing. He also has a couple of other stories in our newsletter, how gold demand remains resilient, and gold, the world's friend for 5,000 years. Get our free weekly newsletter from Worldwide or from Harold. Bank of America, their technical analysts coming out and saying we could see $3,000 gold. Also Sean Boyd from Agnico Eagle calling for $3,000 gold. David Chapman, and I think he sums it up quite nicely. Gold remains in a long-term uptrend. Although the uptrend is being tested at current levels, the chart does not show that gold is in a bubble, as some love to claim. If there is a bubble, it's in debt and derivatives and still over-leveraged banking. Gold is a small market. At current prices, all the gold in the world is worth about $7.5 trillion. Compared to $200 trillion of stocks and bonds worldwide and $700 trillion plus global derivatives market. To put things further in perspective, the Facebook IPO is estimated to be over $100 billion. The largest gold company, Barrick, has a market cap of about $37 billion. One of them produces nothing. Also, Bill Fleckenstein coming out and was quoted this week saying, "At some point, the stage will be set, if it already isn't, for an unbelievably explosive rally to the upside in metals. I think given how stretched everything has become, that day is close. But that could mean a matter of weeks, or it could be a few days. We can't know, nor do we need to. The point isn't to predict when, it is to recognize the moment when it occurs and have a plan what to do." And that's what we're saying. You need to have a plan. Connect with Worldwide Precious Metals at wwpmc.com or call them at 1-866-623-2002. They'll help you invest in precious metals. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May 25th, 2012. Our time is 9:05 Mountain, 11:05 Eastern. Radio show runs AM 640 Toronto, 630 CHED Edmonton, QR 77 in Calgary. For those listening in Calgary, next week we will be on Sunday, June 3rd from 4 until 5 o'clock. Keep that in mind. Our show will be on from 4 until 5 on Sunday. And if you ever miss a radio show, they're archived on Harold's website, hesradio.com, rarecoloreddiamonds.com, and we have a podcast you can sign up for through iTunes. You can take us anywhere you go. Worldwide Precious Metals. They want to earn your business. They want to help you start your own precious metals investment account. It all starts with educating you about investing in hard assets. They're recommended by Harold Siegel. Been in business 10 years. They have some 10th anniversary incentives. Speak to them about those incentives. Their telephone number, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com, wwpmc.com. Harold's website's rarecoloreddiamonds.com. Telephone number to connect with Harold, 1-800-432-1022. And hsfineauctions.com. There was an auction on Tuesday that was a massive success. Harold is going to talk about it, and you can go and take a look around hsfineauctions.com. We'll announce our next auction very, very soon. Also look at rarecoloreddiamonds.com. And Harold's number, 1-800-432-1022. The featured diamond this week on rarecoloreddiamonds.com is a 0.89 carat radiant cut fancy green diamond. It is absolutely spectacular. We have a diamond section in our newsletter. If you'd like to get it from Harold, speak with him about receiving our free weekly newsletter. We have some fantastic stories in our newsletter, including diamonds are a great safe haven. And that is a must-read story. Lots of information coming out on diamonds right now, Harold, and it's a very, very exciting time.
Never been more excited about anything that I have the diamond market. It's just doing so tremendously well. All the auctions, first of all, we had our 6th auction on 8 Siegel Fine Auctions on Tuesday, and it was tremendously successful. We had some magnificent pieces up for sale, some beautiful gold and silver and platinum coin sets that all sold and did extremely well. And then we offered some amazing diamonds, and every diamond did extremely well. And some of the highlights were, the vivid yellow flawless and the purple pink argyle and the vivid pink argyle just did extremely well. And again, we're so pleased to have been able to have built that for our clients to resell their high-end collectibles. It's one thing to own these amazing collectibles. It's another thing to be able to sell them. We are the only company that took the time, the money, and everything in order to build this, and we have the only live online real-time auction site for rare colored diamonds and for high-end collectibles. So, again, we may have one more auction before the summer, then we'll take a break till October. And I'll let you know if we're going to have one more auction. If we do, it's going to be on some beautiful argyle pinks. So I'll let you know on the next radio show and be able to send everybody emails. If you do not subscribe to our newsletter, it's totally free of charge. So please sign up for it. It's just loaded with amazing information. Randy just does a sensational job every week of researching. And again, we make all this information available to our listeners free of charge. We are also coming out within the very near future with our newsletter, and it's going to be more than likely weekly on rare colored diamonds and on auctions. So if you want to sign up for that, that's going to be available to you also. All in all, with the state of the world financial markets, the rare colored diamond market is on fire. It's explosive. The prices that are being seen at auction have never, ever been seen before. The one that I'm most proud of is yellow flawless diamonds. We brought yellow diamonds to the forefront when nobody else would ever talk about those diamonds as investment. And if you look at what's happening at auction right now, especially in yellow diamonds, they're just doing better than almost any other class of diamonds. So, again, who would have ever thought, except for us, that that was going to happen? Last year there was a 2.5 carat fancy vivid yellow VVS1, so it wasn't flawless but close to it. It was a beautiful vivid yellow diamond. It was put in a Bulgari ring. It was supposed to sell at auction, according to the experts at Christie's, for about $150,000. It shocked the world by selling at $950,000. That's what I'm talking about. When these diamonds go to auction, they're selling for way more than what the estimates are. And again, it's not that the people at Christie's and Sotheby's don't know their business. They certainly do. They're experts. It's just a sign of the times. People are petrified of the paper asset market, and the safest place to put your money is in diamonds. They never decline in value. Certain diamonds go up by 25% a year, double every 4 years, like yellow flawless is. And again, then there's some of the really extreme diamonds. We've been doing a lot of work on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Do yourself a favor and go to that website this weekend. You're going to see the most beautiful diamonds that you have ever possibly imagined are available. And we've done a tremendous amount of work. I've literally put, and over the next week you'll see the results of it, about $25 to $30 million worth of new diamonds on our website. One of them is a purple diamond. Now, the rarest diamonds in the world are red diamonds. There's very, very few of them available. Maybe every 4 or 5 years one comes out of the mine, and they can sell for as much as $2 to $2.5 million a carat. However, in all the years I've been in the investment business, 35 years, and I've been in the diamond business, the fact is that very seldom does a purple diamond ever become available. I mean a pure purple diamond. And if you've never seen one before, go on to rarecoloreddiamonds.com, go to the loose diamonds section. You'll see all of the colors that we carry listed. Click on the purples, and you'll see the only pure purple diamond available probably in the world today. It's a 1 carat, it's just over a carat, it's a heart shape, it's pure purple, and it will literally take your breath away. Now, a 1 carat diamond is about the size of your baby fingernail, and that's how big this diamond is. It's a heart shape, it's perfect in every way, it's pure purple, and the diamond sells for over $1 million. Now, most of our clients that invest in diamonds do not spend $1 million or $2 million or $5 million on diamonds. We do have those type of diamonds. We have diamonds that start at $15,000, and we have diamonds that go all the way up into the $30-40 million level. However, the diamonds that we recommend that you invest in are diamonds, in all reality, that are the least expensive. The fancy yellow flawlesses, the fancy light yellow flawlesses, the fancy intens, and the fancy vivid are a tremendous way to go at this point. They never, ever decline in value. They increase in price by 25% a year. They double in price every 4 years. But the exciting thing is that during times of high inflation, these are the diamonds that went up 500% in 1979 and 80. Because we truly believe that inflation is going to be massive, we're very heavily recommending to our clients that they get involved in the yellow flawless market, and you can start buying diamonds in that level at about $15,000. Within the next 5 years, a $15,000 diamond, it will double in 4 years. And in 10 years, a diamond that you can buy for $20,000 will be worth $100,000. The other thing is that we will sell these diamonds for you anytime that you want on our auction website, which is 8 Siegel Fine Auctions. So go to the website this weekend, start off at the loose diamond section, look at our yellow flawlesses. You're going to see close to 100 diamonds up there. There's some large diamonds too. There's a 4.5 carat fancy yellow flawless. We just put a 10 carat flawless yellow, intense yellow up there. We have a 30 carat intense yellow flawless diamond coming onto the site. But most of the diamonds that you want to buy are slightly over a carat, between a carat and 2 carats. The fancy light yellows are about 15 to 18,000. The fancy yellows are about 20 to 25,000. The fancy intense yellows are in the range of 30,000, and then the vivids, which are the highest color grade, the best color, they actually go for 50, 60, 70, 80,000 dollars a carat, depending on the cut. But these are the type of diamonds that will respond to inflation and world problems better than almost any other investment, and they have never ever gone down in value. So I recommend those very highly. I also recommend the Argyle pink diamonds, and we're starting to put some magnificent new pink diamonds up on the website. The Argyle mine, which produces 95% of the world's pink diamonds, is going to close very soon, within the next 4, 5, 6 years, and these diamonds can increase 10 times what today's prices are. You can get involved in pink diamonds starting at around the $25,000 to $30,000 level. Now, we're also carrying some diamonds that are not Argyles. These are larger pinks. Argyles are considered smaller pink diamonds, but when you see a pink diamond go at auction in the multi-millions, those are not Argyles. Those are diamonds that may come from South Africa, South America, or from India, and they're famous diamonds. They're very, very, very difficult to get, and at times extremely expensive, but they go up more than almost any other asset. If you go to the loose diamond section on our website and look at the pink diamonds, there's going to be fancy pink, fancy intense pink, and fancy vivid pink. Look at the fancy intense pinks for starters. There's several diamonds there now over a carat. There's a 101 pear-shaped fancy intense pink. There's a 105 radiant fancy intense pink. There's a 108 fancy heart-shaped, fancy intense purplish pink that will take your breath away. And then there's two larger ones, a 204 cushion fancy intense pink VS1. Then there's a 3.5 carat radiant fancy intense pink. These are all diamonds that are so rare, they're pretty well one-of-a-kinds. At auction, though, will go for a literal fortune, and I do have other diamonds put away that are even larger than that. I've got some 10-carat and 15-carat pinks that, again, we don't really show on the website because, again, we don't want dealers from around the world seeing all of these diamonds. The other diamonds that you really want to pay attention to are green diamonds. Green diamonds are amongst the rarest diamonds in the world. Maybe once every 2 or 3 years a green diamond will become available. We featured a green diamond this week that is slightly under a carat, and that diamond is nearly flawless. Go to our green diamond section. You will see more green diamonds on our website than any other website in the world because we invested heavily in green diamonds. We're in the process of writing a book on investing in green diamonds, and I believe that green diamonds are as rare as blue diamonds are, and we know the blue diamonds just went up 700% over the last few years. So we featured a green diamond, which is extremely rare. It's one of the most beautiful diamonds you'll ever see, and it's nearly flawless. And the price on the diamond actually is very, very good. Green diamonds are amongst the rarest in the world and can be ridiculously expensive, but again, they do nothing but go up in price. So you want to look at our green diamonds. We're in the midst of writing a book on green diamonds and doing some tremendous research for you, and that will be available to all of our listeners because, again, we want to continue to educate you because the rare color diamond market is one of the best investment markets you could ever deal in. They never, ever fall in price. They're so rare that, again, we built rare colored diamonds to display our diamonds to our clients, but then on top of that, we're the only company that can resell these diamonds for you because we own H. Siegel Fine Auctions, which we've had 6 auctions. All have been tremendously successful, and this last one was the most successful of all. We actually sold a few diamonds that were in the 6 figures, and that's the first for us. We're very, very proud and pleased of that. Yellow flawless diamonds are diamonds that you should definitely concentrate on. They're very reasonable. They start at $15,000 and they go up from there, and those diamonds respond to inflation better than almost any other asset. They went up 500% in 1979 and 80. The pink diamonds from the Argyle mine or the larger pinks you'll do tremendously well with. And for the first time in my history, I brought to you deflawless whites. They are the only white diamonds that go up in value, and they go up in value so heavily that they can double in price within a couple of years. They're so difficult to get, but the only white diamonds that you want to invest in are the deflawlesses. The D-flawlesses and the D-internally flawlesses, and at present I have 1, 2, 3, 4, 5, 6, 7, 8, 9 D-flawless diamonds on the website. I honestly think that I own more D-flawless diamonds than anybody does in the world, and I'm adding 4 or 5 more. One of them is 7 carats. Another is a 5.5 carat Asher cut, square emerald cut, that will literally take your breath away. And this weekend we're putting up a 1 carat long emerald cut D-flawless. These diamonds are absolutely off the charts rare, will make you a fortune of money. We put up 3 blue diamonds. These blue diamonds are so rare and so beautiful. One of them is a 68 radiant, fancy, vivid greenish blue. It's almost turquoise in color. These diamonds will take your breath away. Then the pièce de résistance, one of the most famous diamonds on the entire website, is a 3.5 carat pear-shaped fancy vivid blue. That diamond's in the 7 figures and one of the rarest diamonds in the world. By the way, we invested heavily also in the technology that will video our diamonds. So when you go to our website, you're going to see these diamonds, not pictures, but videos of every single diamond. It shows you every aspect of it. So again, we're very, very pleased and excited about that. That purple diamond, when you see it, you will not believe it. I'm going to be putting 3 or 4 red diamonds, the rarest diamonds in the world, on the website in video. They're just being videoed as we speak. The green diamonds, there's several up there. Again, we're the only ones that have these magnificent collectible greens. We have 2 vivid orange yellow diamonds. You've got to see them. One is up on the website. The other will be up next week. And then that purple heart, again, anybody that has seen that diamond just could not believe that what they're looking at, a vivid, a total pure purple heart. When you see the video, you just will not believe that a diamond like this exists. So again, with the state of the world economy, with currencies going under, with countries going under, with the problems in the stock market and derivatives and Wall Street and everything going on, there are very, very few safe places to put your money. I've invested a fortune in the rare color diamond market. They're safe, they never go down in value, and we have the wherewithal to deliver them to you and to resell them for you. Again, it's the best investment you could make in response to inflation, as well as gold and silver, without any risk. And again, we only carry the very, very best, because when I go to sell these diamonds for you, that's how we make our money. We get 10% of the profit only. So if we do not do well for our clients, my company doesn't do well either. Again, I cannot emphasize enough the importance of taking some of your money out of the paper asset market and putting it into the hard asset market. Gold, silver, and diamonds will get us through these difficult times. Again, I want you to look at these rare colored diamonds. If you're an investor that invests under $50,000, you want to look at the Argyle Pinks, and you want to look at the Yellow Flawlesses. If you're looking to invest over $100,000, again, we have diamonds that will literally do that for you also. So, again, do yourself a very strong favor. Do your homework. Go on rarecoloreddiamonds.com this weekend and look at our loose diamonds section, investing in diamonds section, and our featured diamond, and you're going to see the most beautiful assets you could ever possibly own. I'll just leave you with this one last thought. I speak to a lot of clients and a lot of investors. Every month when they get their statements from the stock market, they shred it and throw it in the garbage. Can you imagine an investment like a beautiful diamond that you don't have to worry about it going down? You're not going to read bad things in the newspaper. We could put it into a beautiful necklace or ring for your wife or your sweetie, and you've got something that she'll have tremendous pride of ownership. She can wear this and enjoy it while the prices are going up and up and up, and when the time comes to sell it, we will sell this beautiful diamond for you on our auction site, H. Siegel Fine Auctions. Again, there's not a better time to do this. The prices will be going up in September, so now is the time to get involved in rare colored diamonds, while, again, we have this magnificent array of diamonds to show you.
Speak with Harold, rarecoloreddiamonds.com. It's the #1 website on the internet for rare colored diamonds, natural fancy colored diamonds. Even has the rarest of the rare white diamonds. You can check those out. The featured diamond this week, I love green diamond, 0.89 carat radiant cut fancy green diamond. You can see the video on the website under featured diamond of the week. It is spectacular. Get our newsletter from Harold. There were some great stories this week. In fact, there was a quote from Alan Vandenborn. This is a story that's from Bloomberg. He's the co-founder of the Singapore Freeport. He says there are no new mines being found around the world right now. There is a consensus in the market predicting a significant growth of the diamond pricing because of this imbalance between supply and demand. Also, another Bloomberg story. This is an interview they did over in Asia. Diamonds are a great safe haven, according to Alan Lando. He's the CEO of Novell Asset Management, and he talks about investment opportunities in diamonds. You can watch that interview, get our free weekly newsletter from Harold. All you need to do is connect with him, rarecoloreddiamonds.com or 1-800-432-1022, 1-800-432-1022. The other stories we have, for the rich, diamonds are the new stocks. We have information coming out every week, as Harold says. We go and we take a look at auction results from Christie's and Sotheby's, other sources. We go throughout the entire internet and find the latest stories on diamonds, and we'll be happy to send them to you. All you need to do is connect with Harold at 1-800-432-1022. rarecoloreddiamonds.com is another way to connect with him. The main way, go to his website and take a look at those beautiful rare diamonds. And to invest in precious metals, the company Harold recommends you use, Worldwide Precious Metals, Canadian company. They've been in business 10 years. It's their 10th anniversary. Let them earn your business. Let them educate you about starting a precious metals investment account, about gold, silver, platinum, and palladium, and what's involved in ownership. The telephone number, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. One of the stories, and it's quite long, and I would really encourage you to get the newsletter from Worldwide, is in the silver section. And James Turk was interviewed by Eric King from King World News, and he talked about silver and equated it to Apple stock. And there is a chart, you can see it in our newsletter, where they have overlaid Apple with silver lagged 40 months. And it's amazing to see the similarity. In fact, James Turk says in this article, people who bought Apple back when it was $80 would have never guessed it would go to $600. And he believes that if Apple is similar to silver, we could see silver go to $400. It's a must-read article. Get it from Worldwide. Connect with them. 1-866-623-2002. 1-866-623-2002. Their website is wwpmc.com. We have about 5 minutes left. And, Harold, there's one story that I wanted to touch on. We're all aware of the sovereign debt crisis. But one story that really caught my attention this week was in our U.S. debt and deficit section of the newsletter. USA Today did a story about the United States and their debt problems. And really what it's coming down to is if you use proper accounting principles, you would find that the United States is dramatically in debt a lot more than they're admitting to. In fact, under the accounting of deficit, the deficit under accounting rules that they're using, the official number was $1.3 trillion. But when you actually add in liabilities for Social Security, Medicare, and other retirement programs, it rose to $3.7 trillion for 2011. And some of the key highlights from this story, Social Security in the United States has the biggest financial slide. The government would need $22.2 trillion today set aside and earning interest to cover benefits promised to current workers and retirees beyond what taxes would cover. That's $9.5 trillion more than was needed in 2004. Deficits from 2004 to 2011 would be 6 times the official total of $5.6 trillion. In fact, the federal debt and retiree commitments equal $561,254 per household. By contrast, an average household owes a combined $116.57 for mortgages, car loans, and other debts. Then you have, on top of it, a story out of Providence, Rhode Island we have in our newsletter where you have, and was never taken into account, you have somebody who worked for the fire department for many, many years. He's retired now. He's 75 years old. He's getting a massive pension of $200,000 a year. If he was to live to age 100, they would be paying him out $700,000 a year. It's indexed at 6% a year. You can see, Harold, and we have about 2 minutes left here, you can see one of the things I've talked about for a long time on our show is the United States has a debt time bomb, and it will go off, and we need to protect ourselves in hard assets because ultimately I think the only way the United States gets out of this is to inflate their way out of it by printing money, creating inflation.
You are 100% right, Randy. There's no doubt, and that's, again, it's almost like a matter of just sitting back and waiting for these dominoes to fall and waiting for the situations to happen. Again, we've been doing this for 10 years, that we've been recommending these type of assets because of situations that we felt were going to come forward. And now that they're right upon us, again, I think that we're very close to seeing these markets take off again. It's been a rough 8-9 months. The markets have gone sideways as they try to digest all of the problems that are happening worldwide. But I think that, we're getting a much clearer vision of what is going to happen. And again, with the sovereign debt situation in Europe and as bad as things are in the United States, again, everybody's out of money, and the fact is that it's going to explode and explode very soon. Make certain that you're prepared and protected, because again, it's too late once it's already happened. If you've been listening to the show for a long time, or if you're a new listener, understand that, again, we've been in this business for 35 years. I've been through the run-up in the markets back in the 70s and 80s. I've been through the inflationary times and been through many of these situations before, so I do have the experience of knowing what these markets have done in the past, and that's why we've made these recommendations going forward, and they've all turned out to be extremely strong investments. So, again, I know the last 9 months has been difficult, but again, I think we're a stone's throw away of seeing these markets take off. And with all the shorts out of the market, I think that the market is ready to start to move back up to the upside. I think that we're very, very close to the bottom of this market if we didn't already see it last week at 26.60 in silver and around 15 and a quarter in gold.
Thank you very much, Harold Siegel. Thanks for another great show.
My pleasure. I wish everybody a wonderful weekend. We have a long weekend here in the United States, so going to get a little rest and relaxation. But again, go on the website this weekend, look at rarecoloreddiamonds.com, get our free newsletter. I think you're going to be blown away with what we have to show you.
rarecoloreddiamonds.com, telephone number 1-800-432-1022. Take a look at Harold's auction site, hsfineauctions.com. And investing in precious metals, wwpmc.com. Connect with Worldwide Precious Metals, 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.